Welcome back, everybody. Today's video is an exciting one. I'm going to be sharing with you my 10 stocks that I own. You can actually see it here on the screen already. My investment portfolio through Robinhood, and so my stocks are showing there and my total amount invested. So for today's video, we're going to be talking through the 10 stocks I have, why they have them, and before we get started in that though, if you do not currently have an investment account with Robinhood, now is a great time to get started. There is a link in the description, an affiliate link, so it helps me out too. If you click that, you will actually get one free stock from Robinhood to get yourself started on the journey here. That was how I started off. Clicked, got my free stock, and yeah, I've been investing into it ever since. So links in the description for that. If you want to get started with Robinhood, get a free stock and start investing some money each and every day into the future investments with the stock. So on the screen here, you can see my current portfolio with Robinhood is just over $13,000. This has been about 3 years, so I have not been putting a whole lot into this. If you watched my previous video on saving $500 a day, if I would have been doing that, that could have been am I doing my math right there? $18,000 over the last 3 years. So if I've been putting that amount of money into this, this number would have been probably into the 30,000s, if not even more, because we've had such crazy growth in the stock market in the past couple months. So my complete investment into this, if we go back to when this first started in October 2018, I have put in $6,278 over the course of these 3 years into this, and this includes stocks and some cryptocurrencies. We'll talk more about cryptocurrencies probably in a future video. This video is going to be focused on what are the stocks I hold and why do I hold them. And again, quick disclaimer, I am not a professional. This is not professional finance advice. This is just my opinions, showing you what I have, and you do what you feel you should do or consult a professional about this. So let's jump right in. The first stock on the list that I have is Microsoft. And we'll look at these at last 1 year and let's see, last 5 years. We'll do last 5 years, that way you get a kind of an idea for what this company's growth has been. So main reason for buying Microsoft, once I got Robinhood, Microsoft, Windows, we use it on so many computers. Their technology is used in many different places. It's a company that I believe in. I think that they are going to have a prominent place in the future of technology, and they have a good track record of growth of their stock. They also do pay a small dividend, which is basically cash payments that are made out to you, profits that are paid out to you, depending on the company, sometimes once a month, once a quarter, or once a year. So that's my first pick, is Microsoft. That's more of my personal one, of just, hey, this was a company I believed in and wanted to do that. And that's one of the cool things about stocks, is if you have, again, money available to invest in it, if you're setting aside money for specific investment outside of a 401k or savings and you're wanting that, it's kind of fun to be able to actually just buy stocks directly in a company that maybe you use a lot of, or you just believe in, things like that. So that's my first pick, is Microsoft. The second here is just the stock ticker O, which is Realty Income. This is a company that works with real estate. I believe they're a relatively small company, but they've been around for a while. My main reason for this company was they do have a high dividend of 4%. Well, actually, it's kind of like an average dividend, 4%. And if we look over the past 5 years, obviously with last year they had a little bit of a dip, but this was one that I had actually come onto and seen a while ago. Somebody, I think, was mentioning in a video, a way to invest into some of the realty, things like that. So again, this isn't necessarily a recommendation for this stock. This is just me showing you ones that I have and kind of some of the reasons why I've picked them. And then Monroe Capital. This was one I definitely saw on a YouTube video. Their past 5 years, unfortunately, actually has been down quite a bit. I was able to buy these. When did I buy it? My average cost is $8. So even though they've been down over the past 5 years, I did buy in during the dip here. So I am making money on the stock overall. but they do have a 9% dividend, which means they're paying out 9% profits I think they do it once a quarter. So that was kind of one that drew me to this, and we'll talk more about dividend stocks and things like that in a future video. Just because they pay out a lot doesn't necessarily mean it's good, because if they're paying out their profits to you, well, that means they don't have as much money in their company to invest in, and so that is kind of a sign of this downward spiral here. So this may or may not be a good one, but it was intriguing to me because of the high amount of dividends that they pay out. And my number 4 stock, not in any particular order, just going down my list here in Robinhood, is Iron Mountain. They work with storage of information, like digital storage of information, kind of data centers, stuff like that. And they do have presence internationally as well. So they were one that, again, they have a pretty good dividend, and you'll see a lot of these specific stocks I have dividend payouts. I think that'll be a future video topic where I'll talk more about what that could look like. But for me, why so many of my stocks have dividend payouts is kind of one thing that is kind of encouraging as you have a stock, is when you see benefit in the day-to-day from it. So if you just buy some shares of a stock, let it sit for 10 years, that's probably a good thing to do, and that's what a 401k, things like that, should be doing, is saving and investing for a future use. But with dividend stocks, it's kind of satisfying in the moment. So if you have trouble waiting 10, 20, 30, 40 years for your money, the dividends are nice because those will get paid out to you, and then you can decide if you want to take those dividends and withdraw them and use them, or better yet, invest them back into other investments into the stock market. So that's Iron Mountain, and let's see, 5 years. They are currently up from where they were 5 years ago. They were kind of flat, though, for a while there. But again, they had a pretty decent dividend payout, which means that they're paying out a lot of those profits, which is why that line may be more flat than you'll see in some others. Okay, this is the first one that I would say is probably a good one to get into if you don't really want to get into all the details of trying to figure out what a company's about. Does it make sense? Is it risky? Is it not risky? And these are ETFs. So this is the S&P PowerShares S&P 500 High Dividend Low Volatility ETF. And so what's nice about these is these are going to be collections. So an ETF is going to be a collection of multiple stocks that have been picked for a certain purpose. And so these were actually stocks that have been picked that have low volatility but have high dividends. And so you can see that over the course of the last 5 years, this has had some growth, but it's been a pretty steady, consistent line. So whatever you buy into, the goal is to try to keep that amount steady. Obviously, you can see the big drop here. So the stock market is volatile. There's chances for greater growth than what is seen, and there's chances for greater loss. But what this one does is it has a dividend yield of 4.29. And so it's a collection of multiple companies that pay out dividends. So this one to me is actually one I buy a lot into. I do have 45 shares of this one right now. It's, I thought it would show oh yeah, there it is. It's 15% of my portfolio. So it's an easy one because it's made up of multiple companies, and they're paying out dividends each month on this one. So actually see if I have some history here. Yeah, so here's the history. You can see each month, currently almost $6 in dividends, which is not a huge amount. But again, that money is also hopefully growing in the stock market, and you're getting paid out profits that you can either cash out or reinvest into this investment or other investments. So number 6, VMY, Vanguard High Dividend Yield ETF. Very similar to the one I just showed you, but this is Vanguard's High Dividend Yield. And again, it's an ETF, a collection of multiple companies. And in Robinhood, they'll give you here under the About, gives you kind of a read-up as to what it is, so you get a general idea of what you'd be investing into. This is only about 8% of my portfolio, so only about half of what I have done in the other one. They have a slightly lower dividend yield, 2.8%, so a little bit less that they're paying out to you. But if we look over the last 5 years, they've had more consistent upward growth. So this is one where long term the value of this stock will be worth more, assuming markets continue at the rates they are, but they pay out less. And that's generally what you're going to see. If they're paying out less, that means more is kept in value in the company and the stock price goes up. And then next on the list, stock ticker OKE. They are a natural gas company. And so I believe, yep, I bought them as well when the prices dropped pretty substantially back in mid 2020. So yeah, right now if you had bought them, I can't really get a, if you had bought them when the market was high here, they would still be down. I haven't really bought any more of this, just kind of holding it at an average cost of $25. This has been a pretty good investment from the time that I bought it. They do also have a pretty good dividend payout at 6.57. So that's 6.57% if you want to calculate what that would be. So this is a good one. I'll hold it. I don't know if I'll buy more. I don't have a lot of income to just throw around at these things. So kind of trying to be wise with the investments that I do have. But yeah, they had a good recovery so far from where they were during COVID last year. And then the last three here are some very small shares that I have, but these are also just companies that I directly, so a lot of these other ones were ones I had heard about that they had high dividends and things like that. These are ones, so Google, which is Alphabet Class C. Google's owned by a bigger company called Alphabet that does their investment. There's some complexities around that, but the stock ticker here is GOOG. That's the one I have. Their stock price is $2,574, but the good thing on Robinhood is you do not have to buy a whole share. You can actually just type in saying, hey, I have $15, and it will say, well, that's about 0.005826 shares. So you can buy parts of shares, which is really nice. So if you want to invest in Google stock and you have $15, well, you can do that on the Robinhood platform. And many other platforms allow for that as well. So very little, 0.2 shares of Google. Just try to get my feet in the door with them. Again, they have a solid track record, much like Microsoft, with some really solid growth. They do not pay out a dividend though, which is fine. But yeah, so just 0.2 shares in Google, not a lot there. PayPal. They were one that I just got into this year. I know they started accepting doing stuff with cryptocurrency, so there were some things that just happened. I was like, you know what, that might be a good one to get into. It's had a little bit of return. Obviously, the best time to get into it would have been, any time previously. And so that's actually kind of thing is like, when's the best time to buy a stock for a particular company? Man, unless you really get deep into this stuff, the best thing is just, average into it. Like don't drop all your money once a month into one stock. Just take amounts as you have them available, as you're able to invest, and dollar cost average would be the term for that. It might mean once a week you just dump in 10-20 bucks into a certain stock. Maybe it's an ETF and you just kind of put it in there. That way you're not worried about, I just put in $1,000 and the next day it dropped and now it's only worth 900. If you just do those smaller amounts, it won't be as overwhelming. And statistically, over time, the markets will grow even when there are crashes and things like that. So PayPal's one. I just have a few shares, or 3/4 of a share in. And then the last one, NVIDIA, which makes graphics cards, invested in them, again, because of all the cryptocurrency mining. Really saw that their prices would go up. Again, I only bought half a share, actually less than half a share. If you have more money sitting around, you have more that you can put into some of these things. Because again, the stock market is a risk, and it is even a much higher risk when you're buying into a particular company, because that particular company could go up, could go down. Things like GameStop and AMC that we saw earlier this year, which we don't have time to go into all the details on that. But those are huge volatility things in the market. So my recommendation as far as, if you do sign up to Robinhood, get that free stock, keep that free stock, and then look into an ETF of some sorts. and I believe you can, yeah, you can search by ETF, things like that. We'll maybe have another video where we can look at some more of these. I believe VTI is one, Vanguard Total Stock Market ETF. If you're just wanting just straight up just to buy stock in everything, a little, you want something that's just like, you know what, I don't want to think about if I want dividends. I just want to buy into the stock market. The VTI, Vanguard Total Stock Market ETF, is a index fund that captures the entire market cap. And so this has had very consistent, steady growth over the past 5 years. It's an easy thing just to say, hey, every week, putting in, well, you know, if you're saving $5 a day every week, $35, and just keep putting in $35 every week, and just hold it in there. So if you want a recommendation on, hey, you don't want to get into all this, you want to get into investing, you're going to sign up for Robinhood. This would probably be my recommendation, is just when you get there, search VTI, Vanguard Total Stock ETF, and just dollar cost average into that. You're going to get a great, you're going to get a little bit of everything, basically. So you'll have stock that will grow with the market, and they do have a little bit of a dividend yield payout as well. So you'll start to get some of those immediate benefits of seeing a few dollars come in each month from that. So there you go. Those are my 10 stocks that I own, and a little taste of what investing looks like on Robinhood. So again, that link is in the description. If you want to get signed up for that today, that will help me out as well. What will else help me out is if you hit that thumbs up like button on the video. It helps me out with the YouTube algorithm, and make sure you subscribe to the channel so you don't miss my next video. Thank you everyone for watching. We'll talk to you next time.